Well, gold is trading in record territory once again, this time holding above $3,100 an ounce on the spot side and on track for its best quarter since 1986, up around 19% year to date. Meanwhile, June COMEX gold futures hitting a new all-time high as well of $31.62 an ounce, and silver is also pressing multi-year highs near $35. Now, adding to this, Goldman Sachs is saying there's a chance gold can surpass $4,500 an ounce within the next 12 months if we continue to see these extreme market conditions. With safe haven investment demand rising, ETF inflows surging, and new tariffs set to hit this week, the technicals are front and center.
But this is an exciting data. We are making history as we speak. It's been phenomenal. When you said we had year-to-date 19%, 10% of that's this month.
Yeah.
Gold has accelerated in terms of the pace and the magnitudes of the price move. Exceptional performance, yes.
Yeah. Let's talk about this quarter because it's, created multiple new record highs as we sit just about that $3,100 on the spot side. As I mentioned, June COMEX futures, another new all-time high, Gary. I mean, $31.62 an ounce. What's the technical setup here? I mean, what is the next key range that you're watching for the upside here? Is it going to continue to just climb?
I do not see a reason why it would not. What has impressed me to this day more than anything, and we're looking at a monthly chart just to give you an idea. This, of course, is spot or physical gold. This candlestick, the one I'm pointing to, this represents monthly performance, phenomenal performance last 3 months. You can see that this is by far the strongest month we've had this year. If you look at candle size, you can go back just to judge on a monthly basis what gold has done. And we're either at or above record performance for the month. And so is it going to go higher? The question has to be, as long as the fundamentals that have moved gold higher are still in play, then we should see a continuation. And I'm kind of giving a little bit away by where I think it's going long term. But this is futures, and again, a solid monthly performance, 31.55. We still have political uncertainty, unquestionably. At the same time, we've got a new administration who is implementing import tariffs, and every country that we have designated these levies on has decided to be reciprocal. In other words, give something back. So what is happening is eventually or possibly on a near global basis, costs are going up. So as long as inflation continues to at least not dissipate, but tick up, as long as that uncertainty factor continues to, like a spring, ratchet itself tighter and tighter, the likelihood is that gold will continue to, for lack of a better word, explode to the upside. And then that's what we're seeing, is virtually an explosion. If you look at these last 3 months, if I look up parabolic in reference to a chart, that would be the image that they show. You've got nearly a linear, straight move up for January, February, March. That's unheard of. You can't really go back in time and find a scenario in which you have had very shallow corrections like we get the peak here. It really started, I look at it, February 28th, 25. It goes sideways. It moves up to about 3,086. From there, it corrects very, very slightly. It trades sideways. We call that building a base. Anytime a market moves up, the best thing we can hope for is what we call sideways trading action. If you look at these last 3 months, there is no angle at all, really. It is the definition of parabolic.
Right.
And so that's what we get to show our viewers today, is what gold prices look like on a chart when they're moving parabolic.
Yeah.
For those that have been accumulating or trading it, they know it in their pocketbooks. But this is a real example of what happens when uncertainty becomes so worrisome that the safe haven asset of gold performs in a stellar manner. It does what it's always done, which is have the relative same buying power over time, decades, in some cases centuries, in light of fiat currencies,
Right.
which are having less and less buying power day in, day out, week in, week out, year after year, month after month.